ለመማር ወደ ትምህርት ተቋም መሄድ ግድ አይደለም።
ናሽናል አቪዬሽን ኮሌጅ
ራሳችሁን ከኮሮና ቫይረስ ወረርሽኝ እየጠበቃችሁ በቤታችሁ ወይም በተመቻችሁ ቦታ
በኢንተርኔት አማካኝነት በኦንላይን ትምህርታችሁን መከታተል ይቻላል።
ካናዳ ከሚገኘው ኢንተርናሽናል ኤር ትራንስፖርት አሶሲዬሽን አያታና
ከእንግሊዙ ኢንስቲትዩት ኦፍ ኮመርሻል ማኔጅመንት ICM ጋር በመተባበር የሚሰጡ ትምህርቶችን ተከታትላችሁ በ6 ወር ጊዜ በዓለም አቀፍ ደረጃ ተቀባይነት ያለውን የስልጠና ማስረጃ ባለቤት መሆን ይቻላል።
ከኢትዮጵያ ሲቪል አቪዬሽን ባለስልጣን ሙሉ ዕውቅና ባገኘንባቸው የፍላይት ኦፕሬሽን እና የሆስተስ ስልጠናም በምዝገባ ላይ ነን።
ጥያቄና መልስ፣ የክፍል ስራዎች ብሎም ፈተና መፈተን ክፍል ውስጥ እንዳላችሁ አይነት
ልምድ ባላቸው መምህራን እየተማራችሁ
በኦንላይን ባላችሁበት ቦታ።
አድራሻ ከ22 ማዞሪያ ወደ ሾላ ገበያ በሚወስደው መንገድ 150 ሜትር ገባ ብሎ ናሽናል አቪዬሽን ኮሌጅ
የናሽናል ኤርዌይስ እህት ኩባንያ
ህልሞን እውን ያደርጋል።
I want to welcome all of you to today's class. Now, you remember last weekend, there's an area that we did not address because of the time, but I think we can revisit if you have whatever I had sent you last week, so that we finish up about how to determine the cost of our product. Last week, we looked at how to determine the cost function, the total cost function, which we can use as managers to predict or to focus what we expect to produce in future. For example, you may have been planning to produce more or to step up your production level, and then you can plan now for the cost that you intend to incur by using the cost estimation function, where we had y is equals to f plus vx, where y stood for or stands for total cost, and then f stands for fixed cost, and then v stands for variable cost, and then x is the output level, the units produced. So we can use this function to estimate, to determine the fixed cost that we are likely to incur. We can use the same function to determine the variable cost. We can use the same function to determine the total cost that we are likely to incur in case we want to plan for the future production. So that's why the function is very important. But all having been said, we also mentioned that there are different methods that we can use to determine this cost estimation function. And we talked of the accounts analysis method. We talked of the high-low method. We talked of the regression analysis method, okay, and the scatter graph method. Those are 4 methods that we looked at, and those are the common ones. Of course, with the new methods of establishing the cost of every unit, we can use regression, which is mostly applied nowadays for organizations that have embraced the costing and the IT sector, which is actually making things easier for us or for managers to make decisions with respect to planning for costs. Now, just to finish up what we are to discuss last week about the determination of cost of our product, I want to share this so that we can move together. We have talked about the costing function and determination of a costing function using the various methods. But now we need to understand how to determine the cost of a product. And just to remember, cost, we have different types of cost. We have the fixed cost, we have the variable cost, and then we have the overheads, or the factory overheads. Now, the factory overheads are in most cases apportioned. For example, if you have a factory manager who is in charge of the production, you cannot allocate, you cannot identify the services he's offering in that department on any unit of production. So in management or in cost accounting, we normally use a basis for allocating some of these costs that are incurred generally for production. Remember, that are incurred generally for production, apart from the fixed and the variable cost. Variable cost, as we saw, are costs that are can be easily identified with a unit of product. And in most cases, you will find that direct materials and direct labor and direct expenses. Then the fixed costs are normally those ones that we have no relationship with the unit of product or the number of units that are produced. Then we have the variable cost. These are the shared costs. I mean, the factory costs, overheads, or factory expenses. These are the shared costs. And because they are shared, we need to have a way of apportioning these costs to every unit or every production line that we are having. Now, in our case here, we have 2 products that are being produced from this factory. And we've been given the cost in terms of the materials that have been used, the direct wages, and the direct expenses. So you realize when you talk about direct cost, direct wages, direct expenses, all these are direct expenses. All these are called as the prime cost or direct expenses. So if you go through this, we are saying a manufacturer makes 2 kinds of bells, A and B. The following relates to this first quarter of the year 2020. Now we have bell A and bell B. Now the bells manufactured during this time, for bell A, we had 30,000, and for bell B, we had 15,000. Now, these are the units that were produced. But now the costs have been given there. For direct material, for bell A, we incurred $3,200. For bell B, we incurred $3,000. For direct wages, we incurred $9,600 for bell A, and then $6,000 for bell B. Then direct expenses, we incurred $4,200 and then $1,600. So giving us a total of 17 for A, 17,000, and then 10,600 for B. Now you're given additional information about the overheads. These are now the costs that needs to be apportioned. All right, so we have factory supervisor, because he supervises the production of all these units, A and B, and as they are being produced, so he's paid a total of $5,520. And then the packing wages and expenses, we cut $500, and then factory administrative expenses, we cut $4,500. So you are being told you are required to prepare a statement showing the cost of each of the bell when ready, taking the following into consideration. 1, factory supervision to be charged in proportion to the direct cost of raw materials. So the basis for apportioning the factory supervision cost is on the basis of the direct material that we have incurred. for each bale. So how do you find this? How do you find the ratio of apportionment? You only take the direct cost of raw material for each bale, the total direct cost of raw material for each bale. For example, for bale A, the ratio for bale A will be 3,200 over 3,200 plus 3,000. Okay, 3,200 plus, sorry, over 3,200 plus 3,000. So the total of 3,200 and 3,000 is 6,200. So to apportion the factory supervisor's cost, you take 3,200 over 6,200 times 5,520. That will be the portion for bale A. The portion for bale B will also be 3,000 over 6,200 times 5,520. So when you do that, you'll be able to get the ratio, what you need to provide for bale A and what you need to provide for bale B. So having been told that, the next slide shows all those workings and how the figures came about. Then number 2, we are told packing expenses to be apportioned in the ratio that direct cost of raw material plus supervision cost of bale A bearer to similar cost of bale B. So you need to get the packing, for the packing expenses, which you've been told is 500. So we are told we need to add the direct cost of raw material plus the supervision cost. So the supervision cost you already will have gotten by apportioning the 5,520. So you add to the raw material, and then now you determine the ratio to which to share that. Now, factory administrative expenses to be apportioned, to be charged in the proportion to the bales produced. So the factory administrative expenses, we know the number of bales produced. We have 30,000 and 15,000, that giving us 45,000. So to get how much needs to be allocated for bale A, you take 30,000 over 45,000 times 4,500, and you'll get whatever is supposed to be allocated for bale A. Then for bale B, you take 15,000 over 45,000 times 4,500. So when you do that, you'll get this analysis. Like for direct cost, figures that you already have there in the illustration here, you already have those figures. You already have these figures. So it is now this total, and then now these are apportionments. After you work out all that, you'll get these figures, and please confirm these figures if you can. Please confirm them so that whatever is allocated in terms of factory supervision to bale A is 2,849, and whatever is allocated to bale B is 2,671, giving us a total of 5,520. For packing expenses, we have been told you apportion according to direct cost plus supervision cost. So direct cost, we had 3,200 plus, now this is whatever plus this, that is 2,849. You get the total, and then now to apportion that, you take whatever you have here over the total of this and that, all right, to get whatever you're supposed to allocate for B. I think I remember one of you had sent a message that you need clear calculations, And I think I'll have to do that. But I think in the handout that I sent, these things are explained clearly. But here, it's a summary because I understand how these figures were arrived at, but you can always get this if you follow what I had sent you. So you take this, you add to the factory administrative costs, which were portioned according to the number of units produced. So this is the cost 17 plus 6,107 to get 27. So 27 is the total cost for Bell A, and then for Bell B is 15,013, and then giving us a total of that. That is the total cost for all the units produced. But for each unit, we can also get as we've gotten here. So now to get the cost per bell, you divide. You take the total cost for bell A, divide by the units produced. So the units produced were 30,000. So when you do that, you get the cost per bell for bell A is 0.7702. And then for B, you take the total cost of 15 and 13, divide by the 15 units that were produced to get 1.002 cost per unit of bell B. So this is how we can determine the cost of. So the issue here, as I said, is to understand how to apportion the overheads, because if there are two products, then the overheads have to be apportioned according to basis in which you have been given to do so. So you should be careful to observe which basis have you been told to apply so that you get the cost that is apportioned to each of the products. So then after that, you get the total cost plus the direct cost to get the overall cost of production. Then you add to get the cost per unit. So this cost per unit, this one is actually the variable cost. So it has no fixed cost element in this. So it's actually the variable cost because the fixed costs are not here. But again, you may be told that we have fixed costs. So if you have them, then you need to apportion, and they are apportioned. Then it means the portion that is given is supposed to be allocated to every product. Then it becomes part of that fixed cost becomes a variable cost because it changes according to the level of production. But you'll find like fixed cost will now be a lump sum figure that is paid for everything, and which cannot be apportioned on this basis. Now, after that, probably I'll welcome any questions before we move to the next step. Hello, any question? Yes? Any question? Hello, are you with me? Yes, yes. Any question?
Hello, Doctor. Can I come?
Yes, yes, yes.
Okay, this is Mohammed.
Mohammed, yes, welcome.
Yeah, I was trying to follow the factors, how each are derived. So just in your spare time or when you have time, Doctor, I expect like an important part, like a formula. Here in the slide or in the TV set or in the laptop, it's difficult to catch up. So just as a formula, 2 or 3 important parts, which one divided or multiplied by which one will come to which one. So I hope you will give us this as a formula, Doctor.
Okay. All right.
Thank you.
So that's noted. Okay, those are now the workings and the formula and the workings, all right? Good.
Yes. Because we are from various disciplines.
Yes.
It has been a long time since we have seen accounting like this.
Yes.
So
yes.
It will help us a lot. Thank you, Doctor.
Okay. Taken. Any other comment? Clarification? Now, Mohammed.
Yes, Doctor.
Yes.
Doctor. Yes.
Is it only for this this one we are discussing today, or even for the others?
The others, Doctor.
Also
just
the others?
Simple formula how to drive them.
Okay, so that is particularly for the ones that require you to calculate.
Yeah, how we get something when we need a specific thing. Okay. Just as you think that is important to know.
Yeah.
Whichever it is, you think as to know it's important.
Yeah,
in order to follow, and if we get some case different from this what you gave us, we can using the formula we can drive the solution.
Okay, so probably what I'll do for the sake of everybody, I'll be referring to the question which you already have, isn't it? And then
yes.
Now I show the workings, how those figures were arrived, and
yes.
Then I will send you. All right.
Thank you.
So my thinking was, when I'm explaining here on the shared screen, you're able to follow as we go through the notes. Whatever, I'm going to do that so that every questions that I've sent you, like the ones we discussed last week, and particularly this one, I will work out the solution and show you the computations, and then I will share.
Thank
All
you,
right,
Doctor.
thanks for that comment. Who else? So do we move on? Hello, are you with me? Do we move on? Moges, are you with me?
Yes, Doctor. We can move on.
So we move on. All right, thank you.
Right. Masfan and Wastanna, please stop your video. Masfan and Wastanna, stop your video. Thank you.
All right, thank you. So now I want us to introduce budgeting, that is budgets and budgetary control. Now, from I hope you're able to see the screen. Yes, so budgets and budgetary control. After establishing the cost, and we remember when we introduced the cost elements, we said we have standard cost, we have actual cost, we have budgeted cost. So I want us to focus on the budgeted cost, and because from the budgets, that's when you compare the budgets with the actual and with the set standards. So this is why budgeting is very important. And as you know, in whatever places you're working, always budgets are important, because when you have a budget, you know where, how, and when to spend the money, and for what purpose. So it's very important to have budgets, even at your family units, budgets are very important. So organizations are encouraged to have budgets, because when you have budgets, you can always remain focused by achieving your goals, because as you plan, as you budget for the operations, you have your set objectives in mind or set goals in mind as an organization. Same to a family. I know every family has its own needs. So as you plan, you also have the needs of the family into mind as you do the planning or as you do the budgeting. So budget is very important at all levels. Even the governments always prepare budgets so that they are guided by the budgets in whatever they are planning to do, to ensure that they reach or they meet whatever they had planned to do in a given period of time. So budgets are actually important. And then somebody may ask, what's a budget? So a budget is a finance and quantitative statement of an operational plan related to a specific time period, which is to be followed during the budget period in order to achieve specific financial objectives of an organization. So it can be an organization, it can be an individual person, or it can be a family, it can be a sector, it can be a region, so a county. So all these levels require budgets so that they remain focused as they are trying to implement their budgets that are prepared. So this is basically a budget. So you can have the quantitative. For example, if you want to produce a number of units in a given period of time, then you'll be looking at you'll be giving the units expected to be produced, and then the amount expected to be spent for production of those units. So that's why we are talking of finance and quantitative. Quantitative is now the units, the quantity, isn't it? The quantity, or you could be talking, if the government, we are talking about the number of roads, that the kilometers that the roads needs to be prepared or to be constructed in a given period of time. So this is the role of budget, and is very important in all levels of operation. So features of a budget: one, it is a financial and quantitative statement of a plan of action. So you must have an objective as you prepare your budget. So what do you want to achieve? All right. So a budget will always have a plan of action. This is what we want to do, and this is how we budget for it, and this is how we want to achieve it. All right. So it is always expressed in terms of money or quantity. So budgets are expressed in terms of money and also in terms of quantity. Like we are saying, like you could be talking of how many schools that the government intends to construct in a given period or a given year. So that is part of the budget. So you give the numbers and then the figures in terms of in monetary terms. Then it is prepared prior to the implementation of the operational plan. So budgets normally come first, and then the implementation comes last, because you plan, you budget. That's why budgets are called plans. They are plans. They are part of planning by the management. So you plan to spend, or you plan to receive from a different source, or you plan to spend on a different source, or you plan to achieve some goal. So it comes first. The budget comes first, then the operational plan comes next after the budget has been prepared. In most cases, the approvals, levels of approvals in any organization that a budget has to go through before it is fully approved and ready for implementation. So these levels are critical, and they are to ensure that whatever budgets that are being prepared are realistic and they're achievable. Now, it is based on predetermined management policy. So budgets are prepared based on some policy that the government or the organization may have. Every government has its policy on budgets. Policy may include the timeline. For example, if it's a government, like in Kenya, our financial year ends in June 30th, on June 30th. So the budgets estimates should be ready by April, end of April. That's according to the Constitution. So it's a policy of the organization that the budget estimates must be ready by end of April. So the remaining time is now time for approvals and discussion by the parliament and all that, so that some certain key areas that may have been probably ignored or may have not been given proper emphasis, they are discussed in the parliament, and then the corrections are done if necessary. So these are stages that are outlined in the Constitution, and they must be adhered to by the government. So just like that, even organizations have their own policy that guides the preparation of the budget. First of all, how do you bring inputs together? Like the budget, even a budget, every budget has inputs. Who is supposed to provide these inputs? And who is supposed to be in charge of the budget process and timelines? Because every organization has its financial year. Some come end of December, some come end of June. But you see now, you cannot start the budgeting process a day to 30th June. So there are those timelines that every organization has set, because it's a process. It undergoes several processes before you get a budget that is complete and ready for implementation. So it's normally determined by the policy that is prevailing, that actually pertains the preparation of the budget. Then it is prepared to achieve specific financial objectives. I know with many organizations, they have a goal. Organizations have a goal, probably is to increase their profitability levels, or probably to increase the shareholders' wealth, or probably to expand those are issues that can be set objective for budget preparation, so that you are preparing a budget with something in mind that you need to achieve. And that is always very important. Even in those who are doing strategic management, you realize that even when you prepare a strategy, you must have some set objective or goals that you need to achieve by preparing this strategy, or the organization needs to achieve at the end of the day. So just the same thing applies to the budgeting, because we have to get to some level by doing the budget. Then it indicates the cost and revenue, capital to be employed, incremental effects on former budgets. So, budgets always based on what has already. That's why we are saying we need to do some analysis, some variance analysis at the end of the period, to see how far we have achieved whatever we intended to achieve, to see how far we have incurred whatever we intended to incur. So we'll be comparing the actual and the budgeted figures, so that we are able to determine the variance, and then be able to do the analysis and seek into why the variance is there. What can we do to improve, isn't it? Or what can we do so that we reduce the level of variance that may have occurred. So it's very important that a full budget indicates the sources and the applications of funds, and how and when, all right? And then the capital nature, how are we going to raise the capital? It could be through borrowing, so you must budget for that borrowing, and how we're going to raise the borrowing. and then the effects of the last budget into the current budget. Okay, some budgets may have rollovers or some items not complete, and then they have to affect now the incoming budget. So these have to be considered whenever we are preparing the budget. Look at the last year's budget, and then start from there, then do the current year's budget. So that's why we are saying incremental effects on the former budgets. So it's important if you are budgeting to look at your previous budget, because it's a continuous process, right? It's a continuous process. So, but we have to have periods, isn't it? We have to have periods. So sooner or later, we're going to see the different types of budgets, some categorized based on the period and how they function for every organization. Now, the benefits of a budget, as I had said, they are beneficial in all manner of ways and different levels, because you spend according to your plans, and you earn according to your plans. One, efficient and effective management of finances. So if you want to achieve that as an organization or as a manager of an organization, then you must have a budget that guides your finances, all right? So by doing that, you'll be efficiently managing the finances for the organization, all right? In whichever capacity. You could be a human resource manager, it could be a production manager, all right? But by looking at, by having budgets, then you will be always trying to effectively manage the finances of the organization in one way or the other. Then secondly, allocation of appropriate resources to projects or productions. We are able to give appropriate resources. And it's normally practical that whenever we are preparing budgets, we always allow for some, we give some allowance for some occurrences that are not expected, like things like inflation, likely to affect the figures that we are budgeting. So a good budget has to consider that whenever they are being prepared. Take care of the inflation aspect. Take care of the economic changes in the economic variables, like interest rates may change. All these affect the preparation of the budget. So a good budget will have to be is actually futuristic. Have the happenings in mind. So whenever you're preparing this budget, you will always have to anticipate for some of these things and always allow for them. It's very important. So we allocate appropriate resources to projects or production, because we may be budgeting for a project that we want to expand on. Then you need to give proper allocations based on the requirements for that particular project. Then it helps to monitor performance. You see, you are able to monitor performance if you have budgets, because budgets will normally indicate who is in charge or who is supposed to execute part of these budgets, like a production manager. So we're able to measure performance of production manager by using the budgets, right? Look at whatever he has done within a given period of budget, and then compare with the budgeted, and then you can always tell whether the performance of the manager based on the budgets. Because that's why we said a good budget is one that is all-inclusive, all right? Because you bring people's views whenever you are preparing this budget, so they own it. So you don't impose a budget on people so that they say this one was not part of them. They were not part of it. But it's important that they own it, and by doing that, it can be a basis for their performance measure, all right? there are people who sell agents, I mean, these insurance policies. And you realize at some point, there are those who surpass the targets. And the organization end up recognizing them. They publish their names in the media so that, and they win awards, all right? So this is a way of measuring performance. And then now, by measuring performance, then people will be motivated to work hard to ensure that they achieve the budgeted items. Then it helps in achievement of set objectives. As we have said that, when you set objectives, you are able to achieve and measure consistently with the budgets that you have in place so that you ensure that whatever is happening is in line with the budgeted figures. And if there are any need for adjustments, then they can be done before it's too late. So that's why it's important to have budgets. Then next, budgets improve decision-making on operations of the organization. As I said, all managers are there to make decisions. So a budget can be a basis for making decisions because you look at the budget provisions and probably what you intend to spend, and then you make a decision based on the budgets, all right? And what you actually need to spend on. So you look at the cost-benefit analysis, you do a cost-benefit analysis by looking at the budget figures, comparing whatever is actual and the budget. Then you can make a decision based on that. You can do adjustments. You can move figures, all right? But of course, by given authorities, you can move figures from one area to another. As a manager, those are decisions that you can make, but you have to be on toes to understand exactly what is happening within your area of operation. Then helps in identification of problems before they occur, all right? So you are able to identify problems before they occur, such as the need to raise finance or cash flow difficulties. We can always foresee this if we have a budget, and we say we need at some point, those are the adjustments I'm talking about. We need at some point to make a few adjustments here and there so that we are able to move forward or we are able to achieve certain objectives. So this is happening because we had budgets in place. So otherwise, we may not be able to control some of these things, one of these things that may come unless you have the budgets. Then they are a tool for planning for the future. We are able to plan for the future. A budget is a tool, as you said, because it has to come before the implementation. So it's a tool for planning. You plan for what you want to achieve. You plan for what you want to spend within a given period. You plan for what you need to earn or to receive within a given period, and how and when, all right? So budgets increase staff motivation, as I said, as a way of measuring performance. Of course, it can be a basis for motivating the staff, particularly those who are outstanding in terms of performance. Then they are encouraged, and motivation is something that is normal. It happens in many organizations. People are given rewards. It can be a basis for rewards. So budgets will help managers in making decisions about staff motivation. So it's a tool that can serve as a basis for that, and together with the performance. So before I go to the next step, which is now the types of budget, I just want to get views from the members. Yes, I can see 2 hands raised, starting with Demiseu. Demiseu, yes? Demiseu? Okay. Eshete. Tagesu?
Yes.
Okay, come on. Yes.
Thank you so much, my dear. My question is
Yes.
elements of successful budget plan and types of budgets. I don't understand these questions.
The elements
Of successful budget plan and also types of budgets.
Types of budgets.
Yeah.
So there is the elements of successful budget and then types of budgets. Okay, who can help us address this? Any other opinion? Demiseo, you are there? Eshete? I can't hear you, please. Okay, the difference between elements of a successful budget and then the types of budgets. Are they one and the same thing or they are different things? Anybody who can respond to that? What are the types of budget? And that's the next area we're going to look at, the types of budgets. I know we have different types of budgets based on certain method of classifying them. It could be in terms of period, it could be in terms of the nature of the budget, it could be in terms of the way it's being prepared, all right? So the elements of a successful budget, this is actually a general question. This is a general question, and I think I expect contribution from all of you. Now, what are the elements of a successful budget? For example, a successful budget should be all-inclusive. Huh? That is an element of a successful budget, and that's what I've been talking about. When you bring all the players or the stakeholders on board to own the budget, but preparation of the budget or giving views about the budget, then that budget is likely to succeed because people will own it, isn't it? Because they were part and parcel of the preparation of the budget. It's different from a budget where you do not participate in the preparation of it, and then you are told to implement it, all right? So that becomes a bit difficult and it's likely to be unsuccessful. That's how I look at it. So a budget that is participatory or all-inclusive is likely to succeed than a budget that is just top-down. Top-down, the one that it's just imposed on you and you're supposed to implement it. That one is likely to not to succeed. Any other contribution? Elements of a successful budget. Another element of a successful budget is timeliness. Okay, it should come at a good time. Yes, Solomon?
Thank you.
Yes.
I think element of a good successful budget to be successful into implementation is one is controlling system. I think the controlling the budget, the capital budget and the financial budget and the work plan. The work plan. To be matched. The controlling system is also to be successful. On the other hand, the monitoring and evaluation systems.
Yes.
Our monitoring and evaluation system. The percentage of the budget and the percentage of the physical work to be matched. Our follow-up to be, on the other hand, our plan also to be considered. Our plan for one, the market to be seen in the future what comes, inflation rate and other environmental marketing views.
Yes.
So it to be participant. Who is participant?
Yes.
The marketers. The marketers who are more engaged into the market. On the other hand, the professionals. So we are participatory. It to be a successful, our budget to be used. More of the time, according to our country, what we have to see is they have to plan a budget. After that, after a half year, the budget cannot be run out. It stops at a middle budget year, you know. So the physical budget and the financial plan and the physical plan to be run out side by side by monitoring and evaluation system. I say that. Thank you.
Thank you, Solomon. That is a very good observation, and this actually the facts that the elements of a successful budget, like controls. You know, you can have a budget, but if you don't have controls, the internal controls, then the budget will not be successful. It will be rendered useless because people are doing things the way they want. But you know, a budget that is followed to the latter, then that budget is likely to succeed, right? So the controls, the internal controls of the organization are there to ensure that it's adherence to this budget that you have made, and the systems are there to support it. That's very important. Then that budget is likely to succeed. The monitoring and evaluation that is done on the budget, that's why I said managers are there to ensure that there is the monitoring of the budget, the implementation of the budget. So monitoring is very important, and evaluating the budgets along the way, so that if there are any adjustments that needs to be done, they can be done before it's too late. All right. So this is very important. And as I said, the all-inclusiveness, a good budget should also be all-inclusive, should include the stakeholders who are going to use it, so that they own it. All right. Then the issue of inflation, economic variables, a good budget should incorporate these variables. All right, the changes in these variables, because these are not static variables; they keep on fluctuating. And as an organization or as a country or a government, you are not going to operate in isolation. You have to operate with other governments. You have to operate with other organizations. All right. So it means all these external variables end up affecting your operation in one way or the other. So a good budget is a budget that will incorporate some of these adjustments in the economy, so that it takes care of those. That's why I said it must allow for those unexpected changes, like inflation, like changes in interest rates in the market, and many others, the variables that may affect the operation of the budget. So those are some of the elements of a successful budget. I don't know whether I'm answering your question. Was it Tegesu?
Yes, and
yes.
Also additional question.
Yes.
My additional question is limitation of budget, and also just like this time coronavirus is every plan and budgets are readjusted. So limitation and flexibility of budgets. Say something. I think it's
Okay, so there, as you're going to see again, we have different types of budget, and then we have the fixed budget and the flexible budget. Now, flexible budget, this is a budget that can be adjusted to meet the needs as they come. All right, but the fixed budget, like most cases, they are they are fixed. They cannot be changed. But as the situation is now, you realize that, as you are saying, there's a lot of money being directed towards COVID management of COVID-19. This is a scenario all over, and you see now it's a matter of life and death. So you find, but of course, even as the government, there are those projects that cannot stall, isn't it? They have to continue, whether it's death or life. Okay, so and there are those that can be adjusted. So those that can be adjusted are now the flexible budget, and those that cannot be adjusted are the fixed budget. Now we are going to look into that. That's actually the next area I'm going into when discussing the types of budgets, and we're going to probably understand this as we go by. But what I know is fixed budgets are not cannot be changed, but the flexible budget, we have flexible budget which can be adjusted to meet the needs of the day as they come. Okay, any other comment or question? Then Ashete, are you back?
Okay, may I continue, sir?
Yes, yes.
This is Tesfakiros, of course. I was having a question with regard to the benefits of the budget. One of it says motivating employees, around motivation. But just in case of some kind of budgets, it restricts some kind of activities, because we might encounter with some kind of good area of or any kind of action to be taken, we consider to be taken into consideration. However, because of budget, we might not take that action. Therefore, I know this as a limitation as well, but as a benefit, unless we couldn't have enough budget, how can it motivate? What's the reason behind that motivation? This is my question. Enough budget might motivate, however, budgeting by itself would not motivate, because within that budgeting, it might be a minimum budget as well as it might be abundant budget. Therefore, that abundancy gives us enough things or flexibility to act. However, that minimum budget will give us inflexibility to act. Therefore, my question is in this regard, maybe if it has another perspective with regard, this one is my question. Over budgeting by itself, even we'll have over budgeting, some kind of government organizations, especially in our country, they do get into some kind of, might be theft, or because even though it's not a material theft, it is ideally when we see it, they do take the amount of money and credit it to some kind of account, or they might put in their own vault, unless the government will take it back to its vault. Therefore, such kind of problems are in the budgeting. Therefore, what can we say about these things? This is my question. Thank you very much.
Yes. That is okay. That's your observation. I like your observation. But anything else that has advantages, it will always have disadvantages. As you put it, you know, it does not give room for flexibility. Like you may want to do even extra, but you find the budget ties you down. So that is a disadvantage of a budget. But you see now, it's just a question of cost-benefit analysis. What are the benefits of a budget, having a budget? And what are the costs of not having a budget? So you'll find the costs will outweigh the benefits in case you don't have a budget. So, but if you have a budget, you'll find the benefits will outweigh the cost. So because you plan, it can help you plan for where you and reach where you want to reach, right? If that budget becomes successful, it will help you move from point A to point B, all right? But if you don't have a budget, you can be operating in an uncertain environment where you don't know whether you will get where you want to be or not, isn't it? So it's good to have a guideline. A budget is like a guideline of how you go about doing things, how you go about your spending, how you go about raising your revenues so that you get where you want to be, all right? So I'm not ruling out those limitations. They're there. Because in fact, I was thinking of another one, apart from that one of not being allowing for flexibility so that people can reason beyond it. There are some budgets which are people, like when it comes to the end of the year and there's some money in some budget line, so you find people end up spending anyhow so that they exhaust the budget, all right? So you see that we have seen this in government offices where they try to clear whatever is left so that they justify their working, all right? So there are those loopholes. But again, as we are saying, for it to be successful, the controls have to be there so that we ensure that the controls are working and whatever spending that is being done is actually justifiable, not just spending for the sake of clearing the budget, all right? So these are things that are happening, but I'm not saying that it's all about benefits or advantages of a budget. We can also have, as much as we're talking about advantages, you can always come up with the disadvantages, all right? Okay, there was somebody addressed. Yes, Solomon. Solomon?
I think a budget to be motivated for the employees is one, when a budget is needed for all things are going to within a budget. When you have to train the employees, it also consumes budgets. They trained, the employees become trained, they become motivated for their implementation of their works. When you have to work anything, we have to say monitoring and evaluation, we have to say controlling, all others. Our budgets are to be consumed for this purpose. So, you have not a budget, you couldn't to say transportation, you couldn't to set per diem for a worker or for employers.
Yeah.
So your plan becomes fail out. You cannot perform it. So I think on this regard, the employees becomes their plan become slower and slower or lower and lower. They cannot be communicate successfully in a work environment, you know.
Yes.
The work by itself, it have its own confidence to give when you have to success your plans. So the budget is one of the power when you have to do any workers, but not only budget, a good environment also important. That's why, because of the coronavirus happens for our country, our more plan is stopped. Only the emergency purpose we have to work only.
Yes.
So a budget within a regard to a good environment is it comes confidentiality or their motivation in their works, it to be a good environment with one manager with another managers. Because we have to lead the business organization, that organization become profitability. Also, the what to say bonus and other things have to be set for the workers or the employers. So the budget is lower. You couldn't to get to set a bonus or for other things. The employers becomes not motivated, not work with their workers fully, as much as possible. I think that. Thank you.
Thank you, Solomon. Yes, you're right with that contribution. So motivation, and skip that. Motivation could be in terms of training, which has to be budgeted for. It could be in terms of bonus, in terms of commission. All these are part of the motivation. Even if there is also the self-motivation, where you realize that you have achieved your budget targets. All right. When you achieve your budget targets, you get satisfied. And that is already a motivation, right? Because when you want to move to another company, probably seeking for greener pastures, those are, I think, the questions that the other partner would be interested in, to know if you are actually performing to the levels, the expectations of the organization you are coming from, all right? That's why good CEOs always move around from low to top, wherever they are going, all right? Because they have hit the targets and they are even doing much better. So people will want to work with people such like people. And that's a motivation in one way or the other. There was Tess Fakiro. You had a question, you had raised your hand?
Thank you very much. Thank you.
Yes. I can hear you.
Hello, doctor.
Yes, yes.
How about a master of budget?
Yeah.
A master of budget.
Master budget?
Master budget. Yeah, yeah.
How a master budget?
Yeah.
How to implement?
Yeah.
Okay. What is the master budget, first of all?
It's an aggregate of a company's individual budgets designed to present a complete picture of its financial activity and health.
Okay, okay. Now that is dependent on so many factors. One is the structure of the organization, the organizational structure. Two, the controls that the organization may have in place, the internal controls. Now organizational structure gives who is in charge of every unit of the budget and all that. And then now, that is the policy that is prevailing, the organizational policy with regard to implementation of the budget, right? So those are the factors I can come up with that may affect the implementation of a master budget in an organization. I don't know if anybody else has a different opinion or additional opinion. So, Mesfin, are you okay?
Yes, I get it, doctor.
Yeah. Probably when you talk about the types of budget and find them to come to a point where we understand each one, how it plays, the role it plays, then we shall be able to probably come up with how we can implement. But implementation of a budget is a whole process, a whole topic altogether. It depends on several factors, right? Like I mentioned, the structure of the organization, the controls, the nature of the organization. We have service organization, we have manufacturing organization. So all these play a role in the implementation of a budget. Okay, so I think I've exhausted the guys who had raised up their hands. Probably now we can go back to carry on with the types of budget, and then probably.
በትምህርት ከፍ ብሎ መብረር ይቻላል። ናሽናል አቪዬሽን ኮሌጅ የናሽናል ኤርዌይስ እህት ኩባንያ ከከፍተኛ ትምህርት አግባብነትና ጥራት ኤጀንሲ ሙሉ ዕውቅናን ባገኘንባቸው በማስተርስ ዲግሪ ኤምቢኤ በስትራቴጂክ ማኔጅመንት፣ ኤምቢኤ በባንኪንግ እና ፋይናንስ፣ ኤምቢኤ በቢዝነስ ሊደርሺፕ፣ ኤምቢኤ በሪስክና ኢንሹራንስ፣ ኤምኤስሲ በኢንተርናሽናል ትሬድ እና ኢኮኖሚክስ ዘርፎች በእውቀት ለመቅረጽ የበቁ ፕሮፌሰሮቻችን አረንጓዴ መብራታቸውን አብርተዋል። በነገራችን ላይ በኬንያ ሀገር ከሚገኙ ስመጥር ዩኒቨርሲቲዎች በሚመጡ ፕሮፌሰሮች የትኩረት መስክ ትምህርቶቹ መሰጠታቸው ልዩ ያደርገናል። በምርጥ የትምህርት ስርዓት የተገነባው ናሽናል አቪዬሽን ኮሌጅ በመጀመሪያ ዲግሪ በአቪዬሽን ማኔጅመንት፣ በሆቴል ማኔጅመንት፣ በአካውንቲንግ እና ፋይናንስ፣ በማርኬቲንግ ማኔጅመንት አስተማማኝ ትምህርት ይገቢውና ራስዎንና ሀገሮን ይለውጡ። አድራሻ 22 አደባባይ ወደ ሾላ በሚወስደው መንገድ ላይ ናሽናል አቪዬሽን ኮሌጅ የናሽናል ኤርዌይስ እህት ኩባንያ ህልሞን እውን ያደርጋል።
Okay, so now budgeting. So far we've been looking at budget. So budgeting is a process of preparation, implementation, and operationalization of budgets. Okay, and it involves formulation of operational plans for a given future period and expressing it in monetary terms, right? We express them in monetary terms and as well as in quantity, like we had mentioned earlier on. So we have types of budget. Now, budgets can be classified on the following basis. We have on the basis of activity, on the basis of nature of transaction, on the basis of functions. Now we have long-term budgets. That is on the basis of time, long-term budgets. Long-term budgets are budgets that run for 5 to 10 years. 5 to 10 years. All right. Like most governments budget run for 5. That's like in Kenya, the president has a 5-year term. Then after that, he goes back for election. So he may want to achieve some targets by the end of the 5th year. So he'll have a long-term budget that will run for 5 years. Then we have the short-term budgets. Short-term budgets that run between 1 to 2 years. All right. Then we have current budgets or periodic less than 6 months. Budgets that are run for as long as 6 months. And we have even those quarterly budgets, all right? Most organizations have even quarterly budgets, but those budgets actually are emerging from the main budget or annual budget, which emerges from the long-term budgets. Now, on the basis of activity, we can have fixed budgets and flexible budgets. So for long-term, they are fixed. So you'll find most of the long-term budgets are fixed, right? And most of the short-term budgets are flexible budgets. Budgets that you can adjust as the need comes, all right? Like now, most of the budgets that are being affected because of the COVID-19, those are the annual budgets. And you can see they are short-term budgets, all right? Because they are flexible. But there are those budgets which are a 5 years budget. Like, for example, the government budgets, we have long-term budgets which are for 5 years. Those ones are fixed. They cannot be changed. So that is the key difference. And I think this will now address the question of somebody who had asked about COVID-19 and adjustments to the budgets. Then classifying with regard to the nature of transaction, we have long-term budgets, which are now capital budgets, which are long-term in nature. And then we have operating budgets. Operating budgets are normally 1-year budgets. Like governments have capital budgets, which are long-term, and then the 1-year budget, which are operating budgets. Then we have, on the basis of function, we have the master budget, all right, which are long-term. And then we have the short-term budget, financial budgets, which are short-term. Financial budgets, which are short-term. And then we have the operational budgets. You see, there's a difference between operating budgets and operational budgets. Operational budgets are now current budgets which are running for 3 to 6 months. So you'll find operational budgets emerging out of these others, and they are normally running for a period of 6 months or a quarter, a year. Those are operational budgets. So they are very flexible in nature, as opposed to the long-term budgets, which are more fixed than flexible. So this categorization or this classification is very important in understanding how the adjustments can be done in the budget, depending on the type of budget that you're talking about. So you realize, like a master budget, you cannot do there's so little that you can do in the adjusting it, all right? The fixed budgets, that's why they are called fixed budgets. Most of them are capital budgets. And then now they are the master budget. Then the short term, which is normally 1 year to 2 years, are a flexible budget, operating budget, and financial budget. Then we have the 6 months period are operational budgets. Now I'm going to take you through a definition of each one of these so that we understand the purpose under which these ones are prepared. And as you can see, we have the ones that are activity-based, we have the transaction-based, and we have the nature of transaction-based, and then we have the function-based budgets. So fixed budgets, this is a budget that is fixed for a given level of activity or time period and does not change with changing business situations. It does not change with changing business situations. All right? Like now, what we are experiencing now, COVID-19, they are not affecting the fixed budgets. All right? Then flexible budget, all right? Flexible budget, this is a budget that is flexible and can be revised from time to time according to the changing business needs and situations. So this fixed budget and then this 1 year budget are flexible. So you can see the capital budgets or the long-term budgets are not flexible. We cannot adjust them to meet our day-to-day or the needs of and situations that we are encountering. All right. Then we have capital budget. Capital budgets are prepared for the capital expenditure of a business. Capital expenditure of a business. And that's why they are long-term in nature. And the decisions that we make, like finance managers, the decisions that we make with regard to these capital budgets, that's why we are called capital budgeting, all right, are long-term in nature. They're not things that we are going to buy for our day-to-day use. They are things that are long-term in nature, and they require a heavy outlay in form of finances. Heavy finance outlay. Imagine starting a production line, all right, or opening a branch elsewhere. These are things that you need to give it a long-time period of planning, all right? Because it has to be implemented in stages. When you want to open a branch somewhere, you have to start spending into that, wherever you want to have a branch, as early as possible, so that by the time you are expected to be there, you already have met some of these or incurred some of these costs towards the opening of that branch. So these are referred to as capital budgets, because that's why we said budget is very important it will guide you on what you need to do at any given time so that you achieve your objective. All right. You want, by the end of the 5th year, you should have opened a branch in another country. All right. So these are the things that now you need to start working on them early, because you had a plan in place and what you need to achieve on annual basis. All right. Projects have different stages. All right. The starting stage, the development stage, and then now the implementation stage. So these are things that have in call for expenditures that have to be incurred by the organization, and they have to be planned for. We have operating budgets, budget prepared to meet the day-to-day expenses of a business. These are operating budgets, like the annual budgets, right, which are prepared so that we are able to meet our day-to-day needs as they come. And then, of course, these are now flexible budgets because they can be adjusted to meet the changing business needs and situations. Then we have master budget. These are various functional budgets which are integrated together to form a master budget. So a master budget is a combination of various functional budgets. Now, so it's a giant budget, and of course we have seen it's a long-term nature. We have seen it's a long-term in nature because it's now the one that is broken down into these other smaller budgets. Financial budget, budgets related to various costs and revenues of the organization. Budgets related to various costs and revenues of the organization. They are called financial budget. For example, cash budget, you know, we can have a cash budget. We can have a working capital budget. We can have a capital expenditure budget. We can have income statement budget. We can prepare a pro forma income statement so that based on the budget figures, so that we can anticipate for what profit you're going to make, right? So this is where we'll need to use the CVP analysis. One of the topics that you're going to do in the future or later on, and it will help us come up with the pro forma budgets, I mean in terms of income statement, so that we can plan for the profits that we need to achieve. Planned utilization budgets, you know, marketing budgets, administration and selling expenses budget. You know, they are operational budgets. We need to have a budget for, like a marketing budget. Probably we want to market some products. So what are the budgets that we need to plan for so that we engage these marketing, whatever, advertisements and all that. So those ones will fall under the marketing budgets. So that is operational budgets. Financial budgets. Then operational budgets, budgets prepared for different activities or operations of the organization. For example, sales budget. You know, we can have sales budget. We can have production budget. We can have purchases budget. We can have materials budget. We can have personnel budgets. We can have planned utilization budgets. We can have marketing budgets and administration and selling expenses budgets. These are operational budgets. And financial budgets are now like you can have a budgeted income statement, a budgeted balance sheet, and all that. So there are statements that are prepared based on the budgets, so that we can plan for what we need to achieve in terms of our statements. Now, benefits of budgeting. Budgeting gives control over the organization's money and spending. It helps keep focus on the organization's goals, right? It makes the management aware of what is going on with the organization's money. A budget enables managers to know what they can afford, take advantage of buying and investing opportunities, and plan how to lower the organization's debt. All right, so we can plan for the debts in advance. How much do we want to have so that we fill the gap of the cash flow that we have. Then helps managers organize their spending and savings and to notice points of adjustment. Those are now the flexible budgets. You can adjust them through evaluation and monitoring. Enables saving for expected and unexpected costs. So budgeting allows you to plan to set aside money for emergency costs. So emergency costs are numerous. Things like inflation, these are now things that you're talking about. It allows, budgeting allows for that. So you plan in advance for some of these costs that may come across. Now, enables communication with the significant to others about money. This promotes teamwork on working for common financial goals and prevents conflict on how money for the organization is used. So budgets reduce levels of conflict. Assuming a situation where you don't have budget and then somebody wants to spend money on advertisement, and then you deny to pay him the money, then he ends up accusing you for denying it. But when you have a budget, you'll always ask him, is the budget there for this expenditure that you want to incur? Then that reduces the chances of having conflict with the person who was pursuing that payment. These are things that happen in the organizations, and when we have budgets, all these things come out in the right way, and they're addressed with a lot of teamwork. Now, it provides you with an early warning for potential problems. When you budget and take a big picture view, you will see potential money problems in advance and be able to make adjustments before the problem appears. So we are able to cushion ourselves against problems if we have budget than if we do not have budgets. So that is very important. It helps in determination of how much to borrow, and budgeting shows how much a debt load can realistically be taken without being stressed, or if taking the debt load is worth it, right? So you can be able to measure yourself in terms of debt management. How much can you manage within the given period, all right? So that you go for the right debt, looking at the sources and the cost, right? So these are things that can be easily done if you have budgets in place. It enables production of extra money. In budgeting, the organization can get to identify and eliminate unnecessary spending, like late fees, penalties, and interest. This seemingly small saving can add up over time. You know, when you have budgets, you plan for your expenditure and you avoid some of these unnecessary penalties, like the government. For example, in Kenya, if you have to pay rents for any building that you own, for example, Nairobi, we are given from January to March to do the payment. So if you have not paid by end of March, the penalty starts counting, all right? Until when you pay that's when it stops. But you see now, you end up paying more than what you ought to have paid had you paid earlier, before end of March. So these are things that are there, and because you do not have a plan or a budget for that, then you end up incurring a lot of expenses that are quite unnecessary. When it comes to tax payment to the government, they also have deadlines. So, like in Kenya, companies are given, I think that within the first quarter of the following year, to submit their returns to the Kenya Revenue Authority in terms of their taxes. So this is when you go beyond that, of course, the penalties start accruing. So you can avoid some of these things because if you do not have, because you can manage them if you have funds flowing in a manner that is planned for. All right. So you plan for them because you know, of course, they will come, and then you have to plan for that and meet them in good time so that you avoid unnecessary expenses. So that's the beauty of a budget. Now, let me talk about flexible and static budgets, or flexible and fixed budget. Now, from our discussion, we see flexible budget. These are the short-term budgets in one way or the other. And static budgets are the long-term budgets. Like, for example, the capital budgets, those are fixed budgets. They are static. You know, they cannot be adjusted. Now, static budget is one which is designed for a specific planned output level and is not adjusted to a level of activity attained at the time of comparison between budgeted and actual costs. So is one which is designed for a specific planned output and is not adjusted to a level of activity attained at the time of comparison between budgeted and actual costs. So comparison is normally done for the flexible budgets, because they are the annually budgets, and we do comparison probably at some point at the end of the financial year to see the actual cost, compare the actual cost against the budgeted cost, so that if there are any variances, we look into them. So this is actually the static budgets. They have we don't adjust them, and they are aimed at a planned output. For example, I said, if you want to open a branch, for example, in Addis, and I'm a Kenyan, I will start planning for that 5 years from now, so that I start spending there in terms of probably constructing the premises, putting everything into place. But the overall output is to have a branch there, or to have a company in Addis. So these are you cannot change, but you can adjust the flexible budgets, which are now every year you'll have a budget. You'll have now like the master budget, and then you break it down into these flexible budgets, which have now targets to realize every year. Now, static budget is most suited for fixed expenses or discretionary cost situation where expenditure is optional and has no relation with output, such as research and development, advertisement, etc. You know, you cannot, most of these static budgets deal with some of these long-term benefits expenditures that will call for benefits to be realized after a long time. For example, advertisement. You cannot measure the benefits of advertisement until the product is in the market, and after some time, that's when you realize the benefit of the advertisement. Research and development. You cannot realize the benefits of research and development until the output is now there, until you, for example, opening a branch, until I open the branch and I start operation, operating in a this, that's when I can now see and again, it's not immediately after that, until after I've been operating there for some time. That's when I realized the benefits of research and development of opening a branch there. So these are now the nature of static budgets. Fixed budgets is quite useful when the plans permit maximum stabilization of production, or where level of activity of a concern can be established fairly accurately. So most of these budgets are actually relying on expenditures that are more stable, all right? Expenditures that are more stable. Those ones that cannot easily change, probably with the changes in the economic environment, right? Things like inflation may not affect them. Things like interest rates may not affect them, and they are certain in nature. So expenditures that are certain in nature and they are stable, then they can be part of a fixed budget. But there are those ones which are prone to a lot of adjustments here and there. Then those ones will fall under flexible budget. Now, drawbacks of a fixed budget or static budget: they are not ideal types of budget due to conditions are changing constantly. They are unsuitable where labor costs, material costs, and other factors are constantly changing. So you realize that these budgets cannot be applied in cases where we have a lot of fluctuations in terms of prices in the market of goods and services, in terms of inflation, in terms of exchange rates. So this kind of budgets cannot work well in such an environment. Then they are unstable, right? They are unstable for long periods because of its rigidity, all right? They are unstable for a long period because of their rigidity. Now they are rigid. Once, for example, long-term projects, once you start spending into them, pulling out is very costly. So you find planning for them is actually critical, because the cost of pulling out once you start implementing into them becomes costly again to the company. They can be used in a limited way where short-run problems of coordination of activities of different sectors are to be solved. They take away the initiative from the managers since they do not allow them much discretion. So for these budgets, which are static, managers have no discretion over them. They have very little they can do about them because they are like permanent in nature, right? They are static, right? Other than the flexible budgets where managers have discretion over them, they can move figures from one point to another, and that normally happens depending on the situation. All right, so those are the drawbacks of fixed budget. How about flexible budget? This budget is designed so that it can change in accordance with the levels of activity in the organization. It can change in accordance with the level of activities in the organization. So they are not static, so they can change. It is based on the analysis of expense items to determine how individual costs would vary with the volume of output and sales. So these are budgets that you can play around with. You can make adjustments here and there. For example, if you realize that there is a price in the market has lowered and you want to take advantage of that, you can always play around with the budget so that you take advantage of the prices that are prevailing in the market at a given time. So that's the beauty of flexible budget, and I realize that most of them are short-term in nature. So note that there are some certain costs which are fixed over a short period, while some are semi-variable and variable. Semi-variable expenses vary in proportion with the change in output. Okay, we had discussed this, the variable, fixed, and semi-variable cost. So the flexible budgets can also be classified in that manner, right? The flexible budgets can be classified in that manner. Now, flexible budgets may also be used for adjusting budgets to current conditions and pricing out of seasonal variation or change in the length of working period. All right, so you can adjust depending on the situation as they come. For example, taking advantage of the market, the conditions in the market, you can always play around with the budgets to benefit on that. A flexible budget is more elastic, practical, and useful. All right, it takes into account the changes in actual circumstances and is quite useful for purposes of control. So that's why we are saying for managers, they have discretion over these flexible budgets, and because their work is to control, so they can always monitor this and make sure that the control is up to date in the implementation of these budgets. And if there are any adjustments, they can do the adjustments to these budgets. Now, those are the basic types of budget, the static and the flexible budgets, or the fixed and flexible budgets. At that point, I will welcome any comments, from the members or contribution. Yes, anybody with a comment? Comment, contribution, question? Any comment? Are you with me?
Yes, Doctor.
Can I ask? Hello?
Yes.
Hello, sir. Hello?
Yes.
Can I ask a question?
That's
the difference. Yeah, the difference between capital expenditure and capital budget. In the capital budget, we have capital expenditures. There is also in financial budget, there is also a capital expenditure, a kind of capital expenditure budget. It creates me some confusion.
Okay. Now,
the financial budget includes the capital expenditure.
Yes.
Capital budget by itself also, this is the long-term one, deals with the capital expenditure. So what's the difference?
Now, what is a capital expenditure? In other words, that's your question. What's a capital expenditure? A capital expenditure is an expenditure that is long-term in nature. That's one. It's long-term in nature. Two, it is it's an expenditure that is normally huge. For example, buying a machinery. That's a capital expenditure. When you buy a machinery, that's a capital expenditure. It's a long-term in nature because it's not something that you'll just wake up and buy as you wish. It's something you have to plan for because it requires a heavy capital outlay. So that is a long-term in nature. That is that's why you find it in that capital budgeting category, because it requires a heavy outlay and it's long-term in nature. But in the statements or in the financial budget, you have to show it there because assets are part of the statements. Like we reflect assets in the balance sheet, right? And the balance sheet is one of the statements that we prepare. So we can prepare a budgeted balance sheet, which you have to show now the asset, all right? The asset that which is capital in nature in terms of expenditure, all right, in the balance sheet. Another example I can give is issuing of shares. If you issue shares, if you are a company and is issuing shares, it's capital in nature because you are receiving money in form of capital, and it's long term because issuing shares is not something that you just wake up and issue. And raising money through issuance of shares is not something that you just do overnight. You know, you have to plan for that, all right? So the capital that you raise through issuing of shares, that is a statement item because it's capital in the balance sheet. It's an equity capital in the balance sheet. So you show that as capital in the balance sheet, and you can budget for that as capital in the balance sheet. That's why it's becoming a statement, a capital expenditure. So actually a capital revenue. It's a capital revenue in under capital section of the balance sheet, all right? Is it capital revenue, not capital revenue? It's a capital receipt. It's a capital receipt, all right? It's a capital receipt. It's a financing item in the capital statement of the company. So it can also be shown there under the statement, the financial statement, the financial budgets. So you'll find it appearing in both. I don't know whether that one is clear to you.
Do you mean that the portion of long-term investment that will fall within a year will be shown in the current, like within 1 year budget? For instance, if we are going to invest for a capital expenditure that will take beyond 5 years,
yes,
and portion of it can be recognized like within a year, a financial year. Do you mean that the portion, the capital expenditure portion that fall within a year can be categorized as a financial budget and the rest is in capital budget?
Yes, because the portion that you have realized probably in stages, the portion that you have realized is part of the capital expenditure, or the portion is part of capital revenue or capital receipt. Yes, so it is shown as under capital because at the end of the day, you will have to acquire all of it or to receive everything. It's, for example, buying a machine on a hire purchase, isn't it? The first year, you pay some amount. Are you saying that that amount that you pay towards the machine, out of which you still have a balance to pay, you will not have to show that you'll show that under the revenue or the operating expenses? No, it is going to be under capital. It's a capital budget. So that will still fall under capital. Yeah, even in the statement, you still have to reflect as capital, a capital expenditure. Any other question? Yes, Solomon. Solomon, yes.
My question is, hello?
Yes.
The statistical or the long-term budget, how to be adaptability of environment for the marketing environment? How? Flexible budget, you have to arrange or you have to adjust within a marketing situations.
Yes.
The statistical or the long-term budget is how to adjust within the market environment, how to adaptability of it. I think it to be a problem for a managers. What is this? The second is, I think the flexible budget or the manager to be evaluated according to him or his decisions within a marketing environment, within a time, within cost differentiation or others. How to evaluate the long-term budgets, a manager, he is correct or not correct? How can we evaluate a manager's decision? Thank you.
Okay, so I think, Solomon, I like your question. But what I'm saying is a master budget actually is a long-term budget and it's more static. But now you're bringing in the issue of evaluation. How do they evaluate now this long-term budget? And I'm saying the master budget is the one that is broken down into the flexible budgets, right? As I said in my introduction to this topic, I said budgets, we have long-term budgets like for 5 years, isn't it? But within these 5 years, you want to achieve to be somewhere else, to achieve some certain targets by the end of the 5 years, isn't it? So you cannot achieve these targets without breaking these targets or these achievements into years. So even, yes, into short plan. So the short plans are the long term are now broken down into short term, isn't it? So short term is now where you evaluate yourself. Probably at the end of every year, you evaluate yourself. How far have I gone towards achievement of the 5-year plan, right? And then now that's where you now do the cost analysis, the variance analysis, and then see what you need to do so that you achieve now. If you do not achieve your target for the first year, then you see what you need to do to achieve your target for the first year and the second year at the end of the second year, all right? That's why the evaluation, the analysis is part of the evaluation, where you can now assess yourself and see where have I reached in terms of achievement of this long-term plan, isn't it? Because every year you set objectives of achievement for every year, all right, which will work towards achievement of the final 5-year plan. So the evaluation is still done through the flexible budgets, all right? So what I'm saying is the master budget is broken down into flexible budgets, which run for 1 year, but work towards achievement of the same plan at the end of the 5 years.
Sir?
Yes, Celeste.
Is it practical nowadays to have a master budget? Because I see nowadays the master budget seems to be replaced by strategy documents. So really budgeting for 5 years and beyond, is it practical while the strategy document is there?
Okay, so yeah. So is it realistic to have a master budget for 5 years? What is your contribution from the rest of the members? Now, our budget is, as we said, is a plan of action, isn't it? It's a plan of action. And Solomon, are you saying something?
Yeah.
Okay.
I think the master's budget to be parallel with a long-term and short-term plan like that. According to our country, there are GTP plans. And the GTP plan is 10 years, 5 years plans. That plan is arranged with a budget. Arranged with a budget.
Yes.
According to national plan, from from today, the next 10 years, the country becomes to be within infrastructure, other facility, education, hospitality, others to be reached on the percents from today to the next 10 years. So that infrastructure, the roads, hospitals, and others, to have its own budgets to construct, to be trained, or education also needed for hospital. You have to open. There are doctors who have to set it to grow the health of the child or the mothers or the community also. So it needs budget. So this plan arranged within a budget. So the budget you have to use within your one from your yearly taxations, according to the government. Yeah, taxation from the tax revenue you have to collect. After that, to enter to the budget. On the other hand, you have to borrow from other countries. And it means you have to fulfill your budgets for the next 10 years. So we have to be only not plan, only not physical plan only. It is not plan. It is dream. So to be practical within a financial budget, physical plan to be matched or to be readable each other. Left and right hands go within one road. Thank you.
Thank you. Yes. Now, I don't know whether it also happens in Ethiopia like it happens here in Kenya. The master budget, like the government plans for 5 years, are normally politically driven, right? They're normally politically driven. Like the president who is campaigning will say, I want to assure you, after my first term, I will have recarpeted 1,000 kilometers of road. Then people clap, isn't it? You see, and when it comes on the ground, you see, you need now to put that into document, all right? You need to put that into document, and you will find it's something that the plan the president who is incumbent had, all right, that wants to be achieved by the end of the term one. The other one will say, like ours had promised to give laptops to all primary school kids in the country. So he said by the end of the first term, every child in primary school will have a laptop. It did not come to realization, all right? So when he comes into power, okay, people will work out that. Will work on the strategies and what they need to have so that they need to achieve that by the end of the 5 years term. Okay, so now the issue is that there are 1,000 kilometer road. How are you going to distribute this? Because you need to put a road probably in another region, another road in another region, but cumulatively you'll have achieved the 1,000 kilometer road construction. Okay, so now these are now the things that probably you're talking about, because for you to achieve the 1,000 kilometer roads in the 5 years, then you need to estimate how much will that cost the country, all right, to achieve the 1,000 kilometer road in 5 years. Then this is now broken down into flexible budgets. Every year, we analyze, we evaluate ourselves and see how many kilometers have we achieved so far. Probably every year we need to achieve like 1,000 divided by 5. That is 20 kilometers, 200 kilometers. Is it 200? 200 kilometers or 2,000? No, 1,000 kilometers divided by 5. That's 200 kilometers. So you will want to evaluate yourself after the first year. Probably you are targeted to achieve 200 kilometers, all right, the first year, after the end of the first year. So you'll have to evaluate yourself at that point. The 200 kilometers is part and parcel of the 1,000 kilometers that you want to achieve in 5 years' time, all right? So that's what we are saying. The 1,000 kilometers is a master budget, because these others are now working towards achievement of their 1,000 kilometers that had been planned for. So this is the context in which you are talking about. There are 1,000 kilometers. You again, after the 5th year, you will now again evaluate yourself. Now that's where you will evaluate yourself against now the 1,000. Have you surpassed the 1,000 target, or are you below the 1,000 target? All right, after the 5th year. So now that's how it's supposed to work. All right, just in any organization, you may want to achieve some long-term objective, but you can't achieve this long-term objective without applying these flexible budgets, because these flexible budgets now, they're the ones that are taking care of issues of inflation, issues of changes in the market variables. That's the work of now the flexible budgets. But at the end of the day, they are working towards achievement of the master budget, which is long-term in nature. Any comment on that? Yes.
Hello, Doctor.
Johannes, yes, welcome.
Thank you. Me and my sister are taking these courses together. Yes. So I have one question, maybe it's not clear for me, regarding the fixed budget. You state on the fixed budget, there is no flexibility during that period of time. Maybe in this kinds of situation like the COVID, how can, or is there any mechanism that to use a fixed budget?
Hello, can you please repeat your question? I didn't get the question clearly.
All right, regarding on the fixed budget.
Yes.
You stated that on the fixed budget, there is no flexibility on that duration.
Yeah.
Yet, on this kinds of situation, like now on the COVID, we cannot use the budget on time. So, is there any mechanism that we can handle or adjust the budget?
Okay, for the long-term one.
Yes.
Okay, it will be affected in one way or the other, but you see now it's long-term, like the 5 years budget,
yes,
which is broken down into the flexible budgets. So we can adjust the flexible budget because that's what you're operating with for that particular year, for this particular year, to take care of the COVID cases, isn't it? But now yes, we'll have to recover that probably in the next years, so that the fixed budget, which is now like the master budget, will have to continue the way it is. So as much as we are it's going to be affected in one way or the other, because we may have planned to achieve the 200-kilometer road at the end of this year, but you will find we'll not meet the 200-kilometer road this year because of the COVID, isn't it? So now we'll have to divert the funds that we are supposed to put in the road towards the COVID. You see, this adjustment is being done on this year's budget, which is now a flexible budget, which is now actually was intended to work towards achievement of the 1,000 budget. Now, come next year, probably things will have improved. All right. So we'll have to now see whether we can achieve now the 400. The 400. That means, assuming this year we did not get the 200, probably we got 150. We did not meet the 50 because of COVID. So we need to recover the 50 as we go by before we come to the 5th year. Come the 5th year, we shall now evaluate ourselves against the total kilometers we shall have achieved against the 1,000 kilometers that we ought to have achieved at the end of the 5th year. So the beauty about the flexible budgets is that's once you can play around with them to suit the situation that you are encountering. All right? You can play around with them to suit the situation that you're encountering. But again, come as we continue adjusting them, we also try to work to achieve our long-term targets. We also try to achieve our long-term targets in the future after the recovery, all right? We also work towards now achieving the long term. That's why we said those ones cannot be changed. The 1,000 kilometers you cannot change, all right? But the 200 kilometers you can change for now, isn't it? All right, you cannot change for now. But changing the 200 kilometers doesn't mean that you are changing the 1,000. The 1,000 is still there in force until the 5 years are over. All right, so we can now probably adjust now in the next year. We increase, instead of targeting to achieve 200, we target to achieve 300 or 250. So that now we work towards achievement of the 250, because our long-term plan was to achieve the 1,000 goals, 1,000 kilometers.
Thank you.
Anybody else?